We're here in Monte Carlo for the Rendezvous de Septembre. For AMBest TV, I'm Richard Banks. And I'm joined now by Charles Mathias, Deputy Chairman at the Fidelis Partnership. Charles, good to see you again.
Good morning, nice to see you again.
So, a lot has happened with Fidelis since we last spoke. Tell us about some of the big changes.
Yeah, as you know, we don't like to sit on our past glories, so it's been a busy year. It's been a really constructive year. Obviously, we've changed our name to Fidelis Partnership, and that very much reflects the fact that we as a business have to work with partners. Obviously, the Fidelis Insurance Group is our primary partner and our flagship fund. But as you will have seen from what we've done this year already, we're working with lots of other partners. We had a very successful, I think, engagement with the Hamden Agency to create our new Lloyd's syndicate, 3123. Which utilises 80% of the capital comes from Lloyd's names, who've often been, I think, slightly traduced as being old-fashioned and backward-looking. We've found them very well informed about the industry. We love the fact that they are very sticky capital, that they plan to be invested in Lloyd's in the long term as a part of a permanent allocation. And we found the process of working with Lloyd's themselves, with Patrick Tiernan, Rachel Turk, Burkhard, the whole team, we found that really, really positive. We've then also opened our office in Abu Dhabi. We picked Abu Dhabi very deliberately rather than Dubai. It's only an hour between the two, so if you're in one, you're in the other. But we find the engagement that we have with government, with diplomacy, with investors in Abu Dhabi is a definite added bonus. But that's been going really, really well. And I think we've found that our slightly unique position in the market really is opening us up to partnerships across a huge range of opportunities now. So yeah, very busy year, but a very good one so far.
Fantastic, thank you. So when we talk about partnerships, our thoughts turn perhaps to MGAs as well. Yeah. So tell us a little bit about MGAs, the state of the MGA segment.
Yes, I think we're careful to say that we don't think of ourselves as a traditional MGA. If you think of a traditional MGA, it's a monoline or single class underwriter with an annual capacity venture, or maybe it's 2 years. We write now nearly 100 lines of business. We represent multiple balance sheets. As I say, the Fidelis Insurance Group is our flagship fund, but we represent a whole host of big name insurers and reinsurers. And so we slightly differentiate ourselves from that. I remember, I'm sure lots of us do, 20, 30 years ago, underwriters went to an MGA if they couldn't quite make the grade. Now it's completely different. I think Aon said in their market analysis that MGAs are the destination for the top talent, and we very much see that. We're building out our Pine Walk segment, our incubator. We've got 4 new cells coming on, and in each case it is with absolutely top underwriters in their field who have a great following with brokers and who have a real offering to make. We're also seeing that more and more carriers have a specific allocation of capacity to delegated authority, and that this is a deliberate part of their strategy to enter new lines in a cost-efficient way and to develop expertise externally rather than internally. And so we see a bright future for the MGA space as a whole, even though we wouldn't quite call ourselves an MGA.
It's interesting to hear you talk about talent there and the top talent, because a lot of talk this year about the lack of new startups. And one of the consequences of that, in my mind, was being, what does an ambitious underwriter do in the past when they could have perhaps raised some capital and set up? But MGA seems to be a destination.
We have had so many conversations with intelligent people who are ambitious and entrepreneurial and want that opportunity. And if you look at the likes of Clive Washbourne or Rob Ashton or any of our Pine Walk cell underwriters, the attraction is clear that it's exactly what led Richard to want to do the bifurcation, which is underwriters want to focus on underwriting. They want to focus on their clients, they want to focus on their brokers, and they want to do deals. They don't want to be stuck in committee meetings talking about compliance rules or whatever else. So they want to focus on their clients and focus on the underwriting, and that's the big attraction. And certainly for us, because we have with the 10-year binding authority agreement with the Fidelis Insurance Group, we have the Lloyd's capital from names, which is very, very sticky. We're able to offer people certainty of capacity as well as the opportunity to run their own business. And I think that's a very compelling offering.
Certainty of capacity, particularly in what might be a hard market. It's not always easy to come by.
It is, and there's lots of debates about where we are in the cycle. Have we plateaued? Are we still going up? I think there was a traditional view that in hard markets capacity was freely available to MGAs. It was in soft markets that companies would start taking capacity back. We're certainly not seeing any of that. As I say, companies now have specific allocations of capacity, and I think a lot of carriers really see the value in the delegation of authority to people with expertise and particularly access. With our office in Abu Dhabi now, but also if you look at portfolios like our European mortgage book, the vast majority of that is done directly with the client, and that kind of access is very, very valuable and saves money.
I'm going to try and draw you out a little bit as to where we are in the market. AM Best's got a positive outlook on the global reinsurance segment. What are the challenges and the opportunities that you see facing the market?
It's an unusual hard market, but we are seeing good terms and conditions broadly, and we're not seeing a huge amount of attack on retention levels at the moment. Pricing flat, maybe it's up a bit, maybe it's down a bit, so it's no sort of dramatic movement. But I think what we do see, and what is unusual, is that there are no new formations. And there is retained earnings. Obviously, that creates more capacity, but there's a lot more demand. We're talking to clients here. Almost every client we talk to wants to buy more limit, and inflation is still at work there. So I think it's an unusual market in that. If we go back to 2005, when Richard Brindle founded Lancashire, there was a class of 6 then. There is not a single concrete funded 1-1 new formation, and that is unusual, and I think that speaks a lot to investors' wariness about cat risk still. And if you just look in this quarter already in Canada, you've had 4 cat events. They're $1 billion or more each, and so you've got $6 billion of losses in Canada from secondary perils in the third quarter already. I think investors are very, very wary of allocating capacity to this market, and particularly if it doesn't show discipline in the upcoming renewals.
Charles, thank you very much indeed for joining us.
Great pleasure. Thank you for having me.
For AM Best TV, I'm Richard Banks.